Welcome to Entrepreneurial Edge, where we decode Wall Street's best-kept secrets. Hedge funds, billionaires' playgrounds, but not a casino. It's not luck or magic. The real secret? It's about mastering risk and turning uncertainty into opportunity. While most investors chase hot stocks, hedge funds build a fortress around their capital. They obsess over risk, not just reward. Hedge funds are private pools for the ultra-wealthy, using strategies your 401k can't touch. But the core principles, risk control, discipline, research, are lessons anyone can learn. Forget the Hollywood drama. The real action is in research data and finding small, repeatable edges. Armies of analysts crunch numbers, searching for tiny market inefficiencies. It's not gambling, it's a calculated scientific approach to uncertainty. Today, we'll break down how they do it, step by step, strategy by strategy. Ready to see how the pros play? Let's dive in. Booyah! The foundation of every hedge fund? Risk management. Pros think about what could go wrong before what could go right. They diversify, not just across stocks, but across uncorrelated assets. Stocks, bonds, gold, currencies, even art. The goal? Build a portfolio that can survive any shock. Think of it like a championship team: offense, defense, special teams. Each asset has a role. This balance is what separates pros from amateurs. Amateurs fall in love with stories, pros fall in love with process. They set strict rules for cutting losses and know their risk before every trade. No emotion, no ego, just discipline and numbers. If the data changes, they change their minds. They're obsessed with protecting capital, not chasing fads. That's how they stay in the game when others get wiped out. Risk management isn't a buzzword, it's the whole game. That's the edge. Let's see how they take it further. On to the next tool. Now let's talk about the tools that power hedge funds. First, leverage. Borrowing to amplify returns. Used carefully, it turns small edges into big wins, but it's never reckless. They only use leverage where they have a proven edge. Next, research. Hedge funds spend millions on data, satellite images, credit card trends, AI models. It's information warfare, not guesswork. The real secret? Hedging. They always protect their bets. If they're long tech stocks, they might short a weak tech company to cushion any sector crash. Gains on one side offset losses on the other. By combining leverage, deep research, and constant hedging, they build a machine for consistent returns. Dozens of these strategies run at once across industries and countries. The result, a portfolio designed to make money in any market, up, down, or sideways. It's all about stacking the odds in their favor. That's the engine behind the hedge fund edge. Now let's talk about what drives these managers. Follow the money. Hedge fund managers are paid to win, literally. Their pay is tied to performance, the famous 2 and 20. 2% management fee keeps the lights on. The real payday is 20% of profits. They only get rich if you do. This skin in the game aligns their interest with investors. Most funds use a high watermark. If they lose money, they must recover losses before earning more fees. No reward for reckless risk, only for real, cumulative gains. This attracts the hyper-competitive and the brilliant. Many managers invest their own money alongside clients, so they feel every win and loss. It's not just a job, it's a partnership. Everyone's focused on one thing: winning. That's why the best talent flocks to hedge funds, but there's one more ingredient. The final edge? Mastering your own mind. The biggest threat isn't the market, it's your emotions. Top managers like Ray Dalio build systems to remove bias and stick to disciplined principles. They stress test every idea, trust data over gut feelings, and prepare for every scenario. In a crisis, they don't panic, they execute their plan. This relentless discipline is what separates legends from the rest. Hedge funds aren't gambling, they're tilting the odds through research, risk control, and emotional mastery. They focus on limiting losses, knowing gains will follow. They play by the numbers, not the headlines. They're not gamblers, they're the house. That's how billionaires play to win. So what's the real secret behind hedge fund success? It's a relentless commitment to research, disciplined risk management, and mastering your own psychology. The world's top fund managers don't just chase profits. They build systems, control their emotions, and always play the long game. Remember, Hedge funds aren't about luck, they're about stacking the odds in your favor. It's not about beating the market on a whim, but outlasting it with strategy and discipline. Whether you're investing, building a business, or chasing any big goal, the Billionaire blueprint stays the same. Plan, adapt, and never let emotions call the shots. If you want to level up like the legends, start thinking like one. Thanks for watching Entrepreneurial Edge, where we decode the strategies of the world's best. Don't forget to subscribe for more insights that put you ahead of the game.